So good morning, good afternoon, good evening, wherever you guys are in the world. So I'm just going to do a quick analysis for London and New York session for today on a few pairs that are always trading. These are the pairs on my right hand side. You'll excuse if at all you hear any background noises. I'm in a mall, so I'll try just to be as quick as I can. So I'm going to look at CHF Jpy, Euro USD, JPP Jpy, and gold. So I'll start from down going up. So normally when I'm doing my analysis, what I always do is I try to do what we call a top-down analysis. By top-down analysis means I look at the market from a higher time frame and move all the way to the lower time frame. And My technique that I always use is, for example, if I'm looking at a 4 hour time frame, I like to look at one step below and one step higher. So I'll look at 1 hour and I'll look at the daily. If I'm trading with 1 hour, I look at 30 minutes and 4 hours. If I'm trading with 15 minutes, I look at 5 minutes and 30 minutes. But for the sake of this one, to be fair, maybe let's say I'll look at I'll look at it from a 1 hour point of view. So let's start with gold. So yesterday we had a very big move for gold, very huge. In fact, we were looking at it that gold did not have enough volume to go past this level. This level has been used as a previous support and resistance level. So I thought, in fact, for me, I got out around, I think I got out around this level, which was around 18,823, and I slept. I wish I would have stayed awake. I would have caught all this move from here all the way up to here. But anyway, with trading, what we always say that if you miss a move, you wait for the next one. It's like waiting for a bus. You miss one, the next one you'll catch it. So I'll be waiting here just to catch this move backwards because there's what we call if you there's a concept that we call smart money, and if you trade using smart money, what it basically means, every time there's this big move, the market leaves gaps. So for example, one of the gap that the market has left is this one here. I'll just try to give it a different color so that we can you can see how it looks once again there. So I'll try to give it a big color. This is what we call a market gap, and in a market gap in trading lingo, we call it a market imbalance. So the market left that market gap. It also left another market gap here. Just try to highlight it for you guys to see. This is another market gap. Push it up, there you go, and that's another market gap, and the third market gap is here. This is another market gap. If you're in our chat forum on Telegram, we always call this trade imbalance or market imbalance. So as this trade has gone this way, this is what the big boys will look at. The big boys, I mean the big institutions who have all the capital, they will always look to reverse this and try and come and fill up this market. So why do they do that? If you look at a normal candle in a normal circumstances, a normal candle will finish like here, and the next one will start and finish here. So if this candle does not come to fill where the last candle stopped, it will have an imbalance. So for example, I'll use this case. You see this candle finished here and this one was formed from here and there. So it covered this point. And then when the other candle started, it came all the way to here up to here. So this has been filled. But now look at this candle. This one started up to here. And this other one started here and went up to there. And this one started from here. So it left a whole gap, and this one also left a gap, and this one also left a gap. So that's what we call a market imbalance. When you have a market imbalance, it means the market will come back to fill that level. So for me, for today, for gold, since it was a big move, I won't be looking at anything unless there's any special news or there's something special to come and fill up the market. I will sit and wait for this market to be reversed unless there's something important. Because if you look at it from, this was 19th, which was yesterday, gold has been ranging. By ranging, it means we have equal forces of demand and supply. Both buyers and sellers are into the market. They're trying to push the market, push and push and push. And as we always say, if the market has been ranging for a long period of time, what it basically means that the breakout will be huge. So, for example, for gold, we're waiting and waiting to see how the market will behave. So for me, I'll wait. I won't go into any buy. I'll wait for the sell opportunities because I want the market to be reversed. There's also another imbalance that they left down here. So these are three places that I'm looking at for the market to be reversed. And I'm hoping that in the next coming few days, the market will be reversed to this level here. That is what I'm looking at. And as we always say, we hunt like the big cats. The big cats, what it means, the big cats like lions, leopards, cheetah, the way they hunt, they wait for the right moment to pounce and attack. So that's how I also trade. Like I sit and wait. I'm patient enough. You do not have to trade every day. You do not have to. If there's no reason why you have to trade, the market is not good. Sit and wait until price reverses or goes up to the way you have analyzed your charts. So for me, for gold, that will be it. Maybe another thing that I just wanted to mention, if I pull it up to the higher time frame, from since the market passed this level, which was 1830, another support and resistance, another support level will be here. This is the other support level. If it goes past here, the another support level will be 1900. So for gold, that's what I'll be looking at. For Jpy, for me, for a very long time, I've been waiting for the market to reverse because on the daily, I have these places and analysis already put in place that I'm hoping that the market will reverse. And once the market reverses, it will be coming back to this day because on the daily it has been ranging for some time. So I'm just waiting for that big move. If you pull it down same way, market has been ranging. It's not the buyers or sellers who have the market. So if I was going for a buy in this market, I'll wait until price goes maybe past these candles. Once it goes past here, then I can be able to put in a buy. But at the moment, the way it looks like there's nothing much. The market is just ranging. There's nothing much in the market, but you can trade this on a lower time frame. So, for example, if you go down to a 5 minutes time frame, there are a lot of places that you can trade. Like for example, you have this equal top. This will be a good area to look at. We have this double bottoms, good area. Sorry, this was a double bottom, also good area to look at. Another double bottom area, good area to look at. Another double, so many areas if you're trading it on a smaller time frame. And the smaller time frame just basically means you're scalping. So if you're scalping, there's so much opportunity in the market. If you go back to Euro USD, I'll just try to reset this. Euro USD is same thing. The market reversed. If we go to a higher time frame, which is on the daily, I've already marked my trades. I'm using the trend line as one of the strategy. And if you realize the price reaches these places and it reverses, it goes back to there, it reverses, goes up to here, it reverses. I love taking my trades on 1 hour or 4 hour time frame because I'm a swing trader. So if you come back to a 4 hour time frame, that's how the market looks like. Drop it down to a 1 hour time frame. There you go. Let's say 30 minutes time frame. That's how the market looks like. So at the moment we are here, I'm not looking at any buying opportunity unless we go past this place, then I can get into a buy. But one thing for Euro USD, there was a huge move that the market did. Yes, this was the move on a 4 hour time frame. This was the move that the market did. So the market is just trying to correct itself. So if you're going to enter into a buy, I think I'm in a buy in one of my smaller time frames. I got into the buy from here. So I'm holding the trade all the way up to here. This will be my first take profit. If price goes back, I still hold it. This will be my second take profit and third take profit. On the other way around, if the market goes past this area, which is double bottom, this is where people leave their stop losses. For those guys who entered this trade going up, they left their stop losses here. And the way we say that the market does what it wants. The big boys can decide to pull the price back, come and clear all these stop losses and push the market up. So I'll still wait, and I'll be very, 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 very attentive to the market as we go into London and New York sessions. So just keep watching price action. There's no better trading method as price action, because for price action it means you're trading with price. You're seeing what the price is doing and you're moving with it. If we go to Chf Jpy, I had already done my markings. I'm not into this trade because price has been ranging from this level. I'm still waiting. Once price reaches this level, I'll enter my trades and push all the way up to upwards. Nevertheless, if the market is not going that trend, I'll still wait. There's a lot of money here, a lot of orders that people have left here when they're entering this trade. So I'll look for buying opportunities once the market goes down past here. So I think that's it for me today. Let me know in the comment section, or if you're following us on Telegram. Let's see how the market goes, and no, don't leave any money on the table. Practice trading safely, and happy trading.